So, as I told you in my previous session, we are now getting to the second part of our discussion on examinable topics for advanced audit and assurance. So, if you listen to my first video, we have given a fair coverage on audit planning. So, let me to continue the audit planning and get into a exam standard question. So, the best source that we can look at now with the new syllabus is the pilot paper. So, I will be taking you through the long case study. If you look at the paper of your pilot paper, so there are some part of question MCQ and there are mini case studies, and then the third section has longer case studies, and most of those longer case studies are based on audit planning. So, if you connect, just to connect to our previous discussion, right, where I conducted with some session breaks, even during the sessions there were some session breaks that we had. So, these are the things that we have learned. So, audit risk model, you have a very good understanding, and I am making you the same suggestion, right. If you are sitting in front of this, have a piece of paper or a book to write down these concepts, and those concepts are appearing in the slide, and those you will see when we analyze the pilot paper how this is going to help you to come up with answers. So, I am focusing on those three elements: knowledge, application and the writing. So, we have covered the second item, financial statement assertion, which is a very important thing, and how do we connect business risk to audit risk, the risk assessment procedure. This is my last explanation in the previous video about the auditing standard number 315, identifying and assessing risk through understanding the entity and its environment. And then we looked at significant risks, those risks that require special attention. And now let us discuss the next important part of auditing, right. If you looked at earlier, we discussed, now we have a good understanding about, now this is how I started, right, in my previous lecture, right. We started with financial statements, and if you want to ensure financial statements are free of material misstatement, we have to evaluate each of these assertions, right, whether any of these assertions are misstated. Pack cover, then from there we can judge whether there is a risk of misstatement, and then we broke this down into two, inherent risk and control risk, right. And in addition to this analysis, right, these are actually at assertion level you will identify risk of misstatement, but another broad analysis about risk of material misstatement is the two categories of risk which we called financial statement level risk and the assertion level risk. So, in the risk, after risk assessment, auditor will finalize risk as overall financial statement level risk and assertion level risk. So, this is what I want to get at to start today's current discussion. Overall financial statement level risk means, if you remember my example, you have a question about management integrity. So, we can't say which balance is going to be misstated because management is not honest, management integrity, right. And then we said there is a possibility in some companies management override controls. Now, these are examples of risks which you cannot directly link to assertion. So, what is the word we use? These risks are called pervasive, right. Then when you respond to such a risk, you can't ask audit team to go and audit in this way. Instead, you will do some big decisions to address pervasive risk, like allocating a more experienced audit team, do more review of their work and so on. So, but assertion level risk, always auditor will use auditor's toolkit. Now, I refer to auditor's toolkit, take the right tool and hit. So that toolkit we will study. So, I will explain to you what is auditor's toolkit to handle assertion level risk, right. But you may be curious to know what the toolkit is. Let us take a quick look at the toolkit and then come back to explanation. Now, if you look at this, what is in the middle, I think this slide is good because it came in advance. I am showing this in advance, but I will go into a lot of details of this slide through my explanation, right. Now, I said to address an assertion level risk. Remember, many of the examples we discussed earlier, now we spoke about, my last explanation was investment property, right. Now, if audit is going to audit this high risk item called investment property fair valuation in the toolkit, it is very difficult for the auditor to directly detect any misstatement. The first thing auditor should do is to look at company's control. For example, if investment property valuation has been done by a competent expert and management has reviewed the data, assumption, everything, then auditor is happy that possibility of things going wrong is less. So that's test of control tool auditor will take. But having said that, auditing standard restrict. Now, test of control means how management is detecting misstatement. But let me to ask you one fundamental question. Can you audit any given assertion by only performing test of control? The answer is no, because auditing standard says if an item is material, right, you have to do some substantive procedure. That is one item, one explanation why you can't only do test of control. The other explanation is, remember, now this you can study in theory when you go through your study pack. Internal controls have their own inherent limitation. For example, internal controls can be circumvented. Circumvented means bypass by management. That's called management override of control. And then collusion, things like that. People, end of the day controls are implemented by people. Due to people's issue, there are competency gap, understanding gap. So, these are called inherent limitation. Because of that, any audit you have to use this tool which we call what? Substantive procedures. They are the most smart tool, I would say. Before getting to all the documents and checking one by one, smart auditor will look at, use data analytics technology today. This is where you have a syllabus topic called digitalization. Let's say you want to audit sales transaction, right. Let's say it's a telecommunication company. There are huge millions of data points, right. Now, using your data software tool, you will extract all data into your analytical framework and analyze and identify outliers. Outliers means out of all these transactions, there are some unusual revenue transaction, unusual few transactions. After analyzing millions, you will audit those unusual transactions. Now, this is how technology can help analytical procedures, right. But test of detail is more about, auditor is going through documents and sending external confirmation, things like that. Now, it is good for you to be aware about this toolkit, that is assertion level response. Now, can you closely look at, there is another circle around that called overall response. I already mentioned to you, if you have a company where you have a question about management integrity. Now, when you read a case study, you will find in this company, CEO and chairman is one person. He has a lot of power. He overrides, he sometimes influence accounting department decision, CFO's decision, change the accounting policy. Now, ideally, managing director should not interfere with accountant's decision, because accountants is the expert who can decide how financial statements to be prepared. Now, therefore, if you have a company where there is a question about, I refer to same three example which I wrote now, you can see this management integrity, there is a doubt about integrity, management is going to bypass controls, right, or else I will write the third one, you have a question about management competence, right. Then what is auditor's response? That response is called overall response. So, what is auditor's overall response? So, read this carefully, because this is very important and most auditing students tend to forget these things. So, do not pay much attention to this. If I am audit partner, I want to send them to audit a very high risk entity, because first of all, the control environment, directors, their attitudes, their honesty is questionable. This company has inland revenue cases, litigations and so on. So, as a partner, before going through the balance sheet, I want to pay attention to this point, that I am assigning my best team to audit this company. So, one of the overall response is to assign right team, supervise their work closely and so on. And do not forget, I mentioned to you today, right, when I refer to today, even this session is done just after our first session, right. So, I mentioned to you in my previous session what is the best qualification auditor should have. You remember big mall case study we discussed, audit partner is asking managing director question after question because he is skeptical. Now, this is a construction industry, so you are building apartments. Now, there is a new law, quality conditions are tightened, quality requirements, right, are you going to meet them? So, now companies slowly saying yes, yeah, but these political things, they are nonsensical. So, they are slowly getting out of the point. So, my point is, right, if you are auditing such a company, auditor should exercise professional skepticism, increase professional skepticism. Let me to repeat what is professional skepticism again, please make note, I am sure you are using your notebook. Skepticism is what? Attitude in mind, question in mind. As an auditor, you do not just accept what client says, this revenue has increased because there was a promotion. You will ask lot of other questions, what was the promotion, when it was given, what was the impact of it, and so on, right. You ask lot of questions. So, what is skepticism, right? It is a question in mind, probe in mind, where you recognize that there is a possibility that the financial statements could be misstated, right. Why we say that? Because sometimes auditor can be complacent. This is a large organization, CFO is qualified, they use systems, therefore nothing can go wrong. You can't get into that shell, that attitude, because you have to be open mind to see there is a possibility of things going wrong. That is skepticism. So, I explained to you these words in theory, but I will put this in a proper conceptualization before we get into our next case study. And out of this overall response, I explained to you this skepticism, and then this is a very, very important one. And I am sure if time permits, we will be also discussing another session on fraud, and there you will see this word unpredictable. So, what do you mean by being unpredictable? For example, say you are an unpredictable person, right? Now, we do not know what you are going to do. There is a person with different character, you can't probably predict his behavior, right. He is doing various things. Sometimes he looks very tough, sometimes he looks kind, depending on the situation he adjusts. Unpredictable behavior. Now, who is unpredictable auditor? Unpredictable auditor is knowing. Now, see, there are many cases, some companies know very well how auditor is going to perform the procedures. Every time when it comes to checking sales cutoff, what is sales cutoff? Making sure that sale is recorded in the correct period, 31st March. In our case study today, we are going to audit the cutoff. So, 31st March, only up to this you can record the, if deliveries have taken place before that date, only you record. If delivery is here, provided our revenue passing condition according to SLFRS is 15 is delivery. If delivery has happened during first week of April, you can't take it, cut-off error. Now, this company knows traditionally audit is always coming and checking the last 10 invoices, right. The CFO for the last 10 years, auditors are checking last 10 invoices. So, now company auditors behavior is predictable. So, if auditor is not changing this, if they want to manipulate, they will ensure last 10 invoices are right, but 11th invoice onwards there may be a mistake. So, simply unpredictable testing means changing, modifying the way that you do audit. How can you modify? Modify your sample selection method, modify the places that you normally visit. In a stock count, you can visit a place that was not visited previously. So, I explained this unpredictability in advance. Remember, when it comes to fraud risk, one of the response is to be unpredictable, right. Now, this part I explained to you. In addition, auditor can also modify overall how audit is done. I will cover these three words in a little while with my explanation. Now, through this slide you have learned auditor's toolkit, but let us connect this in the overall context of auditing. That is what I am going to do now. So, after that we can probably to be more practical get into a case study and apply what we learned today in terms of audit planning, right. So, now as audit planning we have to start, the proper planning is such we have to start with risk. Now, if I draw like this, what does it means? This is the risk, right. So, for example, risk is increasing, right, this is the highest level. So, if you say this is risk of material misstatements, for me to have some space, say if this is risk of misstatement, right, say for example, this area you will say lower risk of material misstatement, and let us say this is higher, right, say risk of material misstatement, and this one, this area, there are few risks, as you know we discuss, they are significant risk, right. Now, if this is the case, what are the options available to auditors? So, I usually for the purpose of simplification, I put option into 3 baskets, so that you can easily identify, and also I want you to think this example in relation to assertion. Whenever we discuss, look at in terms of assertion, right. Take there is a normal company, straightforward depreciation, right, property, plant and equipment depreciation, straight line method, you do not see anything unusual. So, you can probably say, and in this company controls over stocks, property, plant and equipment, say machinery, the acquisition controls, the capex, all of that is good. So, then if you want to audit depreciation, do you think it has a very high inherent risk? Actually, this diagram is mostly based on inherent risk, right, but then you also have to look at the control to decide these 3 choices. You can give more than 3 choices, but in this case for the explanation clarity, I put auditors option into 3, right. One is, let us say this approach is control based approach, right, and this one I would say is a mixed approach, right, mixed approach, and this one, let us say this is where for some assertion you do, again I am saying this diagram we are looking more at a account balance and assertion level, right. So, only substantive, only say only substantive. Only substantive means you are not going to rely on control in this option, right. So, again auditor has 2 options, even if it only substantive, there are 2 options. Now, in a typical control based approach, auditor can have test of control. See, you are happy with how system, now I am talking about depreciation, fixed asset register is there in the system, you have tested IT controls, it is automatically calculating, and you can do some analytical review, right, substantive analytical procedure, reasonability check on how depreciation has changed, it is the same amount, how it has moved, and probably be satisfied, this is not a high risk. But when it comes to another item, right, let us say this is something else, this may be inventory which is a high risk, but it may not be a significant risk, right. Now, there you approach maybe it is a mixed approach, right. Now, here also you can argue it is a mixed approach, but you can see I have not put here test of detail, right. But in this mixed approach, because there is a high risk, right, test of control is used, analytics are used, and in addition audit is used in another powerful tool, test of detail, right. Now, example, this area may be stock, the assertion may be existence. Now, you see how this can be audited, this is where you have to practically apply auditing, right. If you want to audit in a manufacturing company, stocks are in existence. Now, see how to audit completeness assertion also very difficult. No, now every item which are there in the system, they are physically in existence, right. So, the main thing is you have to be satisfied about company's controls over receiving stocks, issuing stocks, and company whether they are doing periodic stock count, and at a stock count what are the controls they follow, all that you have to be happy, right. And especially whether at the year end if they do a separate count, so auditor will evaluate those control, And in addition, as you know, there is a separate auditing standard on stock, because I am taking example of stock here, stock existence, right. Auditing standard number 501 says if the stock is material, auditor will attend at the stock count and do a sample count, right. Auditor will do a test count to see whether selected items match with the reported balance. So, now in this auditor's choice is, you know, an auditor will do some analytics as well, it is can be a mix. But here, now if you look at the robustness means rigor. Now rigor here is less, this is little rigorous because you are using all three, but let us say you do very, you use all three, so all three are used. But here only substantive, you do not rely on control, right. So, what can be this item? So, it depends, right. It's sometimes you have identified sale as a high risk and you do not rely on control, right. So, then instead you will do analytics, only substantive, but I would tell you, right, if controls are really weak, you may also see analytics, doing analytics is dangerous because system data may not be sound. Then here auditor will decide because of high risk in revenue, cut off, right, I have to do, I am not going to rely on control, I am going to use test of detail, right. So, now these are the choices, these are examples of choices, and if you want to say in the from exam point of view, this can be your testing strategy, right, this can be your audit approach, right. But remember, this strategy is again predominantly based on auditor's risk assessment, and this risk whether to use control or not depends on another two things. I think I should explain to you here, because the internal controls, whether auditor is using internal controls. So, I will just put it like this, internal control is based on, remember, control environment that we discussed. Control environment should be sound, right, and that there should be expectation that there are controls, right. Expectation, auditor should have expectation that there are internal controls which are designed effectively and implemented, then only you can test them, right. And the third point why you need test of control is sometimes substantive procedure is not practical, right. For example, test of details is not practical when you have a huge volume of data, you may have to rely on test of control and substantive. So, you can make a separate note why internal control, right, when to use internal control, whether to use internal control, whether to rely. So, these are three important things, but my main focus of this diagram is a much bigger thing. So, I will just erase this. So, this is to clarify when, so if you can note it, right. To use test of control, control environment should be sound, auditor should have expectation that internal controls are there, designed effectively, implemented. And also another reason is sometimes substantive procedure is not practical, huge volume of transaction, right. So, if I continue to explain to you what this means, now the choice, now you know there are three choices, right. In whatever choices auditor makes, there are different types of procedures auditor can utilize, right. Now, these are, if these are strategies, there are different types of evidence, right, types of procedures auditor can perform. For example, most simplest way of gathering audit evidence is inquiry. Now, again this connects to auditing standard 500, right, inquiry, and then you can check sales invoices, say inspection, and you can do analytical procedures as audit step, audit procedures in any of these strategies, right. And let me to write this example in a different color, this procedure, this is specially used, I am sure when you read the study pack you would have seen this, reperformance. What is reperformance? Especially reperformance is used in the context of control testing. Now, if for example, in my first session I told you finance manager is reviewing an inventory report to see whether there are non-moving stocks. Reperformance means, right, Now you are getting to the shoes of finance manager. Now if you want to test this, you will get 5 reports, 5 months report and see whether actually non-moving stocks have been identified and provided. So you will re-perform what finance director had performed. So I will write some very powerful audit, very reliable audit procedure here specifically, right. That is a separate auditing standard as well, that is called external confirmation. Especially, see again this is a part of auditor's toolkit. When the risk is high, auditor may choose this option, this is auditing standard number 505, external confirmation. Now, what I want to tell you now, these two is called nature. These two is called nature of audit procedures. So, nature of audit procedure refers to one, purpose. So, this is a very important point. You know, if you are given a MCQ, you should be able to handle this type of a question, but I am sure most students do not understand this in this clarity. Nature, now you have seen the word nature is used in many places, but what does it actually means? One is by purpose, you can divide audit procedure into two, one is control testing, other one is substantive procedure. So, by purpose you can divide into two. Test of control, the purpose is to test the control whether control is working, but the purpose of substantive procedure is to detect a misstatement, right. The other one is you can divide it by type. Nature also refers to the type, and these are the different types of procedures. So, in auditor's toolkit, risk based auditing is essentially about modifying three things. One is to modify nature depending on the risk. The second one to modify is the timing, right, timing. And then you can also guess the third word. Now these three words are always used with audit procedures in many standard, right. What is the third one? Extent. So these are the three words that associates with audit procedures, especially in auditing standard number 330, auditors response, nature, timing and extent. So, what can we write about timing and extent? So, we can write a small sentence here. So, I want you to write, I hope these are very powerful conceptualization which really helps you to get the whole idea conceptually what auditing, and the next thing is to apply to a case study, and third thing is to know art of writing. So, timing wise, what is the decision auditor has to make? Higher the risk. Now, for example, one of the decision in timing is whether to do interim audit or final audit, interim versus final testing, right, interim audit versus final. Now, if risk is high, right, higher risk, more of year end work, more work at final stage, right. If risk is low, auditor will plan most of the work at interim stage. What do you mean by that? Let us say in a company, auditor is saying, you know, I want to give the audit report early. The accounts year end is 31st March, I am starting the audit in January and I am going to finish auditing stocks, everything in January, and so that there is no work to be done after March. You can't say that because most of the unusual entry in the past in this company happens at the year end. So, you can't, how can you forget the last quarter which is Jan to March, right. So, there are high risk adjustments take place, then you will plan certain work relating to high risk items assertion at the year end, right. So, that is a time in consideration, right. One main time in consideration, right, when like that, when you test, if you want to get external confirmation, if the risk is low, you can use, for example, in a March client December balance to get a confirmation and do some work, you know, for the transaction between December to March, right. But you cannot do that for a company that has a high risk in terms of, you know, misstatement and year end adjustment. The extent is again very simple logic, you can write it down, right. This is one question on the extent is sample size, right. So, higher the item, higher the risk, right, more item to be tested. higher risk more. So, this is a very important. So, what I want to explain to you through this standard I have, okay, let me to finish, there is another part. So, up to that what you learn, when it comes to assertion level, auditor will modify nature, timing and extent of audit procedures to suit the level of risk. But we know there is another part of this risk, and that is the upper part, right, overall financial statement level risk. Right. When there is overall financial statement level risk, what auditor has to do, we have already discussed, right. If you remember, it is already, I think the slide that I discussed just before this, audit partner may decide to assign more experienced team, right, and then unpredictability, increase professional skepticism. So, this helps to, so I have shown all this to you. This helps to address overall financial statement. So, what is the big idea from this diagram? Risk based auditing is about modifying these three, and especially when there is a significant risk, the arrow goes in this way, and very often you will decide to do only test of detail, but there is no restriction. If you want, you can go here as well, right. There is no restriction provided you can, those controls are effective, right. And then here also there is no restriction, auditor may decide to do this. So, that is how you can decide the testing strategy. So, I think with that explanation you have a good idea about the this 330 auditing standard. It always talks about these three. I think there is one more thing I have missed to explain to you, right, and what is that? That is a very big point. So, I want to add to this, and the way I have drawn the diagram there is inadequate space, but let me to put it here, so that there is a space I can write. So, I am going to say, now here I have put auditor's choices, right. Let me to put straight away this choice, one choice as substantive. This is another learning point for you. So, now in this case auditor will do substantive, not substantive procedures, some substantive procedures, right. Whether level of risk is high, low, medium, not relevant. Audit is going to do substantive procedure irrespective of the level of risk. Let me to put it in red. What is that? Anybody? I mean, I can't again ask you a question and expect you answer, but in this case the level of risk, lower, higher, significant, does not matter. If this is the condition, auditor has to do substantive, there is no option. What is the matter in auditing where there is no option but to do substantive? The answer is, if an item is material, that is where materiality is important, right. Material account balance, right. Material means significant. How do we decide? We will discuss. Transaction or a disclosure, then you have to do some substantive irrespective of risk. Risk assessment is not relevant there. So, these are the principles to learn from 300. It's a lengthier standard, but this is a summary for you to kind of understand conceptually. But like I said, this theoretical discussion, conceptual discussions are useless if you do not know about application. Therefore, before I explain to you, I said I am going to discuss with you pilot paper case study, but before that I want to complete the audit planning section. So, what is missing to complete audit planning? If you have gone through the study text, you would have seen, let me to put that slide, audit planning, right. Okay. Can you only say now, up to now what we learn on audit planning? I said in an audit there are two main things. One is to identify risk. These are the risk areas. Other one is to respond in terms of test of control and substantive procedures, right. But if you want to explain audit planning properly, that is not enough. There is one more thing, the bigger picture, right. So, we know this audit planning is there. Audit plan has two things that we learn now, right. One is RAP, risk assessment procedures, other one is FAP, further audit procedures. And in all three, when we write this, we always write nature, timing and extent, and now you know the meaning of that, risk assessment procedure. Similarly, nature, timing and extent of further. Now, this is, can we say these two are part of audit plan? Correct. And in addition, auditor has to do certain steps required by auditing standards. If you read the auditing standard, this is what should be there in audit plan, steps required by auditing standards. For example, you have to attend the stock count. But I am telling, if you want to properly plan an audit, planning involves another part. What is this part? Now, you can think, what is this part, right. Now, this is a very important thing even in normal life, right. If you want to do something properly, you have to have a strategy. Now, you can, okay, I gave you the word, you have to have a strategy. So, this is OAS. What is OAS in auditing? Overall audit strategy. See, if you imagine if the partner is, now you are looking to do a bank audit, right. It is ineffective for a new audit partner to look at the account set, okay, this is the account set, these items are material and I think these are important. So, we have to perform these procedures. A partner should not plan the audit in that way without having an overall audit strategy which clarifies direction, right, especially before direction, which clarifies the scope, right. Let me to put that in a different color, right, this overall audit strategy, but it clarifies, again very important analysis and I want your full attention to this, right. So, partner has to first clarify the scope, scoping. I write only one letter because I show you a slide in detail this concept, right. Okay, let me write scoping. So, what is the scoping done for the audit before directly looking the balance sheet, and then where the direction of the team should go to, right, that is direction, scoping, direction. And how about timing for the audit, right, not at a procedure level but broadly. And then how about resourcing, right, how can I allocate quality reviewers, supervisors and so on. Now, when you look at these bigger items, that is called overall audit strategy. Again, I am sure you do not understand if I do not give example to you, because what is scoping here, right. Now, I take the example of a bank audit. Before looking the balance sheet, audit partner will ask, we need to identify characteristics that determine the scope of this audit. This bank has 200 branches. Are we going to visit all the branches? And this bank has, even you know, some Sri Lankan bank, they have branches in Maldives, for example, right. Say for example, Bank of Ceylon, and commercial bank has branches in Bangladesh likewise, right. They have expanded. Now, there when you look at the entire accounts, your financial reporting framework is not only SLFRS, right, SLFRS plus, let us say accounting standards, say there is a branch in India, then India standard, Bangladesh standard. Sometimes the standards may be different, but when you prepare your consolidated accounts, you have to have one set of accounting policies. Now, these are scoping questions, the number of branches, and how about currency? There are different currencies that are being used. Now, these questions are broader questions. If you miss them and look at only the balance, you are going to end up with a major problem. Then partner, without looking every item, you know, based on the past experience, partner will say, these are the areas of high risk that I want you to look at. In this company, there is always in the past, right, this past is very important in audit planning, is called team discussion. Have a meeting, kick-off meeting, right? Usually in this company, related party transaction, management override of control and loan impairment have been issues. So these three will go automatically to audit plan, areas of high risk, and then testing strategy, right? Even testing strategy, are we going to rely on internal controls or not? Right. So these are, and there is another big thing under direction, because direction, attention has to go in relation to material item. Then you will ask how to set the maturity level. Can we take 5% of profit before tax? So how do we, oh, profit is not suitable, can we use revenue? These questions are direction type question. Then timing wise, what do you mean by timing question in scoping? Especially reporting objectives, right? Now this is a tough question for those who are working in audit firms, right? Reporting objectives, even now with the current economic situation, I know you know that the reporting, there are even some of the deadlines have been extended, but under usual condition, auditors are saying we are always busy to meet deadlines. So reporting of timing here means, what is the deadline to complete the audit? Right? If it is a group audit, you have to complete other groups, you have to coordinate with other auditors, and then meeting with management. So all these are questions which relates to timing. So if I tell you again, right, reporting deadline, meeting with management, finalization or final audit report, right, then finally there is resourcing, right? If this, I said this is, if this is a bank, are you going to send your IT expert? Right. So if this is a listed company, you have to appoint another partner which we call quality review partner. Now with this clarification, what I want to tell you, audit planning means both overall audit strategy and the audit plan. Putting together, it's called audit plan. If there is an exam question, what is the difference between OS and audit plan? The answer is overall audit strategy. Right, both relates to planning, but overall audit strategy focus is on the bigger picture, right? It has a much broader focus beyond the financial statements, about the boundaries, the direction, etc., right, which can help audit team to be more effective in the audit plan. Whereas audit plans specifically focus on assertion level risk, the risk assessment process and the procedure. So that's the answer. And also in a case study, examiner can ask you, what is the to develop audit strategy for a company, then your headings of the answer should be this. You have to talk about scoping, to see there are branches, are they using different accounting standards, and are they, how about the currency, are there internal auditors, other auditors, all of these are scoping question. You can always use the book and be familiar with this. Under direction there are three questions: what are the areas of high risk, what is your testing approach, and materiality setting, right? Those three are big areas. Then timing wise, reporting objectives, and finally resource in the audit team. So let me to show some of these in slides, and then we can actually go to our main, I mean what I now explain to you is another auditing standard, that is auditing standard number 300. So let me to put everything together now. So this is a very important slide which I will show you in relation to audit plan. I want you to follow. So in an audit, what really matters initially to identify risk of misstatement, right? And then auditor has to see how detection risk should be reduced in terms of further audit procedures based on inherent and control risk. If control risk is minimized, auditor will test those, right? And what we learn, this entire process of assessing inherent risk and control risk is 315 standard, and deciding test of control to what level audit is going to use. The toolbox where auditor can modify nature, timing and extent can be discussed under 330 standard. Overall, this is an audit plan, but beyond that, the bigger picture, the scope of the audit, the characteristics which determine the scope, direction, high risk areas, materiality, audit approach, timing, whether to do an interim audit or final audit, and meeting reporting deadlines, staffing, this part putting together is called overall audit strategy. So this is the big picture of audit planning. And now you may be excited to see the pilot paper, right. I think in the interest of our time, so we discussed a lot of theory, but what really matters in the exam, wow, this is a 20 marks question, and this, if this is your pilot paper and you all are preparing for the exam, you should be absolutely serious about this. And I told you, irrespective of case study, the first thing a logical student will quickly go to the requirement section and see, can I answer these 3 questions, right. And you should be happy with today's learning, are you able to answer this question? So, first question, when you look at it, you feel happy, right, because just now we completed that analysis, explain the difference between overall audit strategy and the audit plan, and not only that, outline key elements of overall audit strategy document. Now you see, are you able to memorize these things, right? See, content of overall audit strategy, that is why I always say, if you are a logical student and if you have painted a picture that overall audit strategy is about, these things, scoping, direction, timing, resourcing, then you have to further ask. Scoping means these are some of the example, right, the reporting framework, laws and regulation, because this is the boundary, right, whether your company is a complex one or not, are there many laws and regulation or not, are there currencies, are there branches to visit, all of these questions. Likewise, you can apply that same thought process to write this answer. Then the balance part, 8 marks in this case study, is where you evaluate 4 risk of misstatement. I am sure while reading this case study, we will write more than 4 risks, right. And when you get this pilot paper, you will definitely see answers as well, but I am here to guide you to the art of writing answer, how to analyze a case study, how to identify each points for the answer. And then there is a last part, and as I told you very clearly, audit plan has 2 things, this is risk identification and this is risk response, right. So, both 16 together, it is a 20 marks question. So, let us look at this case study now. I said this is, I think, the last, the 3rd section in your paper, right. So, you have MCQ part, right. Some of these MCQs may be very sharp. If you are very much good in your conceptual knowledge, very easily you can answer. So, those MCQ questions, and then there is section 2 with mini case studies, and then section 3 are complex questions. Very often they are from reporting and planning, right. So, let us get into this question. This is the question. This is the question that we are going to discuss. You can see, you can just read it, because I know most of you wouldn't have read this, right. This paper will be published very soon. It is for the purpose of webinar, we are discussing this, and so I want you to read these facts as well, so that you will see why. First question is, why should we read this case study? The reason is that we need to answer 3 questions. By reading this case study, we should know where the risks are. And do not forget our framework, the theory that we discussed today. When you talk about risk, you have to look at about 5-6 areas: the industry, accounting policy, KPIs, right. If you forget those things, right, you will miss the picture, nature of the entity and so on. Then the testing strategy that we discussed, substantive, test of control, etc. Now, in a case study like this, I would like to highlight certain things. This is a PLC, because when you say PLC, certain requirements like having a quality partner is essential, and also you should note their profit, right. Why the profit matter? For example, if you want to see whether something is material, right, this number is very important, right, because usually, very often in many organizations, we can use profit as a basis for materiality, but there are some cases you may not use profit. I have not covered materiality, I will probably cover it soon. See, usually say if something is 5 to 10% of profit as a benchmark kind of guideline, we can say it's material, right. So, then you can see whether this is materially misstated if there is any issue, and anyway revenue figures also given. This company's background, yes, partner has given you this information. Then company's history. This company was established in 2001. At the moment 30% of the plants, what is the industry they are in? They are the leading supplier of machinery, plant and machinery used in hydropower industry. So, I highlight the industry because this is a simple or complex industry. Nature of the business suggests it's a high risk. Inherent risk is high if you apply theory, because in a power plant, you know how if they are producing machinery, for example, how do they measure the stage of completion? Can there be work in progress at a time? How do they recognize the revenue? Those basic questions you should ask. At the moment 30% are sold in Sri Lanka, whereas balance is export to Bangladesh and Vietnam. The plant and machinery manufactured by the company are mostly made to order, right. That is another thing that I want to highlight. You see, when something is made to order, it is designed to customer specification, and again risk is high. You have made something if customer is not going to take that. We are reading with skepticism, right, to see every important information we should note. So 4 manufacturing sites they have. Customers approach Lanka machinery to design and develop this specific according to their specific needs, and this one is a very important statement I want to highlight. Customer is required to make 40% in advance, which is used to fund their design, and balance 60 is paid after the installation. So, why this is why I want to highlight, why I am highlighting this, what do you think? Now, if you remember inherent risk, right, now possibility that something can be misstated. Now, anyway if you get an order where you get 40% in money, if company is interested to record the full thing, they may record the full thing after receiving advance as revenue. Or in other words, even this 40% advance can you book as simply as revenue, right. So, I want to tell you, because I will discuss in my next session fraud standard. Remember this point, I will cover that later. This is a very powerful answer in an audit paper. Every company or every answer you may want to discuss this as an answer. Why? What is the topic? Revenue recognition. So, there is a presumption in an audit, every company there is a possibility that there may be misstatement in revenue. But in this company there is a higher possibility. When you receive something in advance, there is a chance it may be recorded, and we can also see is there a reason for them to record. For example, if this company want to take a loan, or there may be incentive for them to record. So, I do not know whether you understood correctly, right, but I want you to think broadly. Auditing is having this skepticism, right. What is the possibility that when you receive money in stage wise, at what point you should recognize revenue? So, immediately when you are planning your answer, right, you may want to identify one answer here, right, which is revenue recognition. But what are we going to write under this? Right, under revenue recognition, the points that you need to write, you have to understand, because if you remember my explanation earlier, I mentioned to you in auditing misstatements are judged always in relation to SLFRS. So, in SLFRS, what is the point at which you have to recognize revenue, right? Now, you remember those 5 steps, right, having a contract, and then the most important identifying transaction price, allocating the most important point at which the revenue is recognized is called when the promise is delivered, right, that promise based on the contract. What is PO? That is performance obligation, right. So, at what point? Usually performance obligation is delivered when the control is passed, and then we have to ask the question when it is going to be passed. Now, you see I am putting it down the bullet points that I want to cover in my answer. So, what is the point at which control is transferred? Is it at a point, in some companies the moment you deliver full thing can be recognized, or sometimes over a period we can recognize, even this 40% if you have some agreement, after completing this part, that even customer can utilize, customer has the right for that because this business you are producing for a customer. You have done that 40% according to customer specification, it is very unlikely it will be given to someone else. In that case there may be argument customer is controlling. In an auditing question, you don't need to be decisive that this is the right answer, but you have to highlight possible risk, right. So, then in this case we have to ask, is it at a period or over a period, and then based on what? That depends on what is in the agreements. It may be based on the delivery, right. It may be based on subject to customer acceptance, right. It may be after passing legal title, right. So, we need to deliberate on all of these matters and then make a final decision, right. But the key point is there is a possibility that advances can be recorded as revenue without fulfilling this criteria. Now, if I want to write a paragraph, these are the bullet points that can be included in the answer, right. So, I will further explain this to you, but now I quickly took one example because this is obvious risk. Out of those 4 risks that you have to write, this is definitely one answer. Then if you read further, the power plants takes 3 to 6 months to build. In addition to manufacturing power plants, the company manufacture and sells small components of the power plant which could be manufactured within 6 weeks, right. So, now they have types of things, right. Now, even in revenue recognition it can be complicated because this criteria may be applied differently to the small components, right, because there are different types. There was a significant increase in number of orders received to produce power plants during the year. So, there is a lot of business during the year. In addition to manufacture and sale, the company provides power plant maintenance service, again another category of revenue. So, which we also see there are multiple category, and again this can be a sub point in your answer, right. How do we record how the performance obligation, right, is delivered at that stage, right. Is that when the service is done or what? So, those are to be clarified. So, we have already identified one big point for our answer, right. Do not forget this answer also has another part to respond. So, let us read the balance. In April 18, right, when we see that, you have to see what is the year end of this company. Now, we are looking 2019 March. So, this is at the beginning of the year, right, April 18, at the beginning of the year, right. Now, here as I emphasize you have to have some knowledge of accounting standard, because missed statements are always evaluated in relation to some whenever there is some item there is accounting standard, right. In this case SLFRS 2 share based payment, there are 2 types of share based payment, equity settle, cash settle. So, a student should at least know what are the broader treatment of share based payment, right. One is in share based payment we are identifying share option rather than share, right. So, it is an option, it is a contract to buy share in future, right. Now, equity settle means it is going to be end up as equity, but remember in a cash settle transaction the accounting treatment is while you record the expense, right, there has to be a corresponding liability. Now, you need to have that knowledge for you to answer this question, right, but of course, the other element is you have to value this share option, because this is something to be done in future, because if you read that according to this plan, directors can exercise their appreciation right not now by 31st March 2020, but according to the standard at the time of the contract you are supposed to ascertain the fair value and then you have to value accordingly at the balance sheet date. So, our big question is how do we value the share option, right, in this case share appreciation right. If you want to value, now do not forget our theory, Now, this is a valuation which may not be straightforward. This has assumption, judgment, you have to look at, apply various model. Now, in share based payment there are different models. If you want to study, you can Google and do more research. For example, binomial method, black school method, there are various methods, various data which are required. Now, for example, the share price in future depends on what? Now, this is 2022. Now, if you read further, the amount of bonus will be based on the increase of the share price. So, one of the assumption is how share price can increase. Now, it is 20. Right. So, it may increase 20 to 50. Now, how it will increase, we have to look at based on the past increase, what is the reasonable assumption, and you may have to discount. So, the past share price increase, this standard deviation, some of the even statistic, if you are using a model to value, there are variables, all of that matters. But simply for your answer, the good thing in auditing, you have to say this is an item where valuation is complex and subjective and may be misstated. For writing that, you will get marks, not to mention about various models and how it is practically done, not expected, but you have to articulate the risk. Then now, okay, let us see how this is accounted on the advice of new FD. Now, see, this is a risk. If FD is new, FD may not have a good understanding, you can highlight as overall risk. No accounting entries have been made. So, we obviously know this is not right. New director has advised to make disclosure in the financial statements. Now, director say disclosure is enough. So, what is our question here? Right. Now, if I again put down, when you happen to write an answer, right, see, I am not using the board, so that it is easy for you to concentrate here itself. When it comes to this answer, so what are the things you have to highlight? One is you have to refer to SLFRS and say that this cash settled share option to be accounted, right, to be, what is the correct word, recognize as a liability, right, with an expense being charged to P&L, right. Now, over a period you will charge. Now, currently your profit is overstated and liability is understated. That is first point. The next thing is when company is going to do that, you have to highlight, right, this requires, right, fair valuation in your answer, right. You have to write this require fair valuation, which involves subjective assumption and judgment, right. Example, right, suitability of the model. Now, there are models, assumptions. Now, this is really reasonable if you write to this level. That is another area to look at, right. Now, if this is done by expert, you have to evaluate, right. Then the other question to ask, this valuation is given to, sorry, this option is given to whom, right, it is given to directors. If you look at the question, introduced to executive directors and they can exercise in 2022, right. Now, in some other question they will say this is to employees, but the question is, will they hold office till 2022, right. Then only you can, otherwise every year you have to assess. Let us say there are 5 directors, if all are going to stay hold office or they will resign, then that has to be reflected. So, all of this need to be looked at in your answer. See, what I am writing here is essentially your answer. You can expand this little bit and complete your answer, right. Then the next thing is, let us go through now itself. As we read, we identify points for our answer. Finance director recommended that company's head office should be revalued. See, whenever these items are there, fair valuation, revaluation, these are straight away answers. Your next answer is fair valuation, right, sorry, revaluation of what? Head office, revaluation of PP. There are external valuer valued all properties, right. So, do we know whether all properties are valued? So, we do not know, we have to check all properties, right. Result in a surplus of 2 billion recognized in equity. I am sure this is material you can see 2 billion is what percentage out of their total asset. Say for example, if it is more than 2-3% is definitely material, right. Finance director has informed the audit committee that no deferred tax need to be provided. Now see, if you do not have basic financial accounting or financial reporting understanding, you will not write this as a point in your answer that this comment given by FD is wrong, right. You have to recognize deferred tax on the revaluation, right, whether it is realized or not. According to this comment, there is no plan for disposal, that is not relevant. So, that is another thing you have to write in your answer, right. So, again if you write this answer, what are you going to write? See, now you are thinking the art of writing in the exam is as you read you plan everything. Now, then next is you take piece of paper and explain these points. So, my third answer would be fair valuation of revaluation of these are simply bullet points where each point can be a sentence you can explain. The first point to say that the revaluation involves you have to fair value at the date of involves fair valuation. Right. So, same answer, right, which involves, right, which in turns involves subjective assumptions. And judgment. Then according to standard we have to check, the standard says all assets to be revalued and you cannot do, they have said that we can check that, right. The next point that you can mention, remember we will read the full case study to prove this point, right. There can always be a management bias in a revaluation, because with the bias if they want to report the higher one, they can put some unrealistic assumption and increase the value. That usually management bias comes under fraud risk, right. But next big point that you can highlight is deferred tax, right, to be accounted for according to the standard irrespective of the plan, the deferred tax need to be. Now, when you talk about deferred tax, I think I may have to explain to this. Now, see, deferred tax is what? The difference between what are the two things, right, tax base and what is the other base? Accounting base. So, accounting base is usually carrying value, right. Accounting base is usually your carrying value. So, tax base. So, we know for example, you have a machine, right, which is 100 million and depreciated over 5 years, right. Then you know at the end of year 1 depreciation net book value or the carrying value is going to be 80, right. But let us say under tax regime there is 50% allowance given. So, therefore, at the end of year 1 your tax base is 50. Now, you can see a difference, right, of 30 million. So, this 30 million, right, you have to recognize this 30 million is a temporary difference, right. So, you have to recognize deferred tax, and then what happens? Imagine this asset in my example, at the end of year 1 we revalued where the new asset is going to be 150. Now, that is going to change the temporary difference, right. So, earlier temporary difference was 30 and now it will be changed. So, accordingly deferred tax to be adjusted. And another point that I wanted to mention, when there is a revaluation, remember depreciation to be adjusted. So, all this point you can write in your answer, right. See, when you write this answer definitely will get full marks. At the same time you have to look at how to audit these items. I will briefly cover that part as well. Then moving on to the other issues in the case study. In January, company entered into a new contract for the lease of several portable cleaning machineries. The present value of the lease payment is 55 million, right. That is the important term in the leasing standard. As you know, this is a hot topic again, because there is a new standard. Please be aware about those fundamental concepts. What the new standard talks about is one model. So, what is the model in the new standard? The lease, we will look at the contract and recognize is there a right to use, right. This is where even operating lease, which were not previously on the balance sheet. Let us say there is asset that has 100 years, say land or something, but you are going to use for 20 years. But earlier it is not on the balance sheet, but now you can value your right based on the lease payments being the present value and book it as asset as well as lease liability. This is simply right to use model under leasing standard, and you will also depreciate the assets. Now, in this case we will see what has happened, right. In this particular scenario, what you see is there is a lease payment of present value is 55 million, the fair value is 60 million, but we are taking this on lease basis. The contract is for 8 years, but economic life is 10 years, right. So, what we need to do for the 8 years, you can recognize your right at this amount being the present value. The lease installments are paid in respect of every year, and then so see this is simply not booked. No, one of another issue you can see, right to use, right, lease right has not been recognized. So, what happened? Your asset, liabilities, right, both understated, and as you know, there has to be depreciation impact when you report the asset. So, therefore, this is another possible adjustments that is going to be identified by the auditor using the right. Now, in this answer you will emphasize that company can use the right to use model and account for the lease. Then the next item is, as you know, we have to identify 4 is I think already we have identified, right. At the year end, company reverse a provision relating to ongoing legal dispute with a local customer who was claiming 100 million. Now, company has reversed this provision, right, 100 million, right. Again you can calculate 100 million, is it material? So, like I explained to you, say something about more than 5% of profit, 0.5 to 1% of revenue. So, there are benchmark when you discuss materiality, you will understand, but it is very easy. So, this may be material, the provision is reversed, the amount was provided in full in the financial year ended the 2015, but it was reversed as a new director believes that this is very likely that the company can defend the case. Now, here as an auditor, what is your question? You can still write this as a risk. The basis for reversal of provision need to be identified, because director cannot just decide that. Right now, according to standard, if you remember provision standard, right, provision is a present obligation which arises from a legal or constructive event, right. So, in this provision is always recorded at the best estimate amount, right. Now, if there is a present obligation means we know very well that this is going to be, you know, paid, right. If the obligation is possible, see I use the word possible, meaning the occurrence or non-occurrence depends on uncertain event, then it is a contingent liability. Now, in this case earlier if this was recognized as a provision, you can now question, right, the basis for reversal, right. Now, for example, whether new director got any indication from a lawyer, right, is it based on, now simply what you have to challenge is basis for the reversal, right, where the FD's judgment is based on what, right, is it based on legal proceedings, status of the litigation. For example, case has been withdrawn by the court, yes, then of course there is no problem, right. So, you have to check with the lawyer all of that, right, and then subsequently you can check. I am actually, if I go to that part, I am explaining to you how to audit that, but risk is simply that if you want to write this as a risk statement, that reversal may not be appropriate if the obligation, right, present or possible obligation still exists. It may require provision or a disclosure, right, as a contingent liability. Then the next part, all manufacturing site of the company will be closed at the year end to allow inventory count to take place according to most recent management accounts which are available as at February. Work in progress is valued at 520 million. You can obviously see how material this 520 work in capital, you know, this is a company producing machinery. Like I said earlier, our obvious issue is how do you value this work in progress. Definitely this is going to be answer. You can write as another answer, valuation of work in progress, right. Majority of these orders will not be completed. In recent past, several customers have made complaint about the defects. So, that is another issue, right. So, defects, so what is there a warranty? Yes, the company offers 5-year warranty period. So, now we have a question about whether they should recognize a warranty provision, right, for the defects of the plants, where in the relevant, where in the event of a defects, company will repair plants free of charge. Now, this has two issues, right. Now, again I am telling you how to write the answer. One is valuation. See, I am writing as assertion, valuation of work in progress. Here N is missing. So, what are the bullet points? Why do you think this is a high risk? One is complex nature, because these are machineries, right. A complex nature, right, requires estimation. Example, right, what is the stage of completion, right. Now, you have to look at based on the stage of completion, you have to based on this you have to allocate cost and decide the value, right. It is complex, it requires expert opinion and it requires judgment, right. So, therefore, and it is definitely material. So, therefore, you will decide this is going to be a significant area, right. Then the other issue that you can easily highlight is the warranty issue, right. So, what is the issue? What do you think? What is the concern here? Warranty, right. So, warranty is going to be definitely an issue. The reason is that I just mentioned to you there is a standard called provision, right. So, we have to ask whether provision to be recognized in relation to warranty if there is a present obligation. In this case, it is likely to have a, now see, if company has given in a contract, then there is a legal obligation, but according to case study in the past, if they have settled this, it is a constructive obligation. So, accordingly company should have the best estimates about the possible claims. So, this is, if this is not recorded currently, the profit is overstated and liability is understated. Again, this is area that requires subjective assumption and judgment. I think, see, we have discussed more than 5 answers. You can see overall how many points we have written. At the same time, they have given us the analytical review result, that also we can look at. You know, there is a significant increase in increase in GP. And when it comes to inventory days, we can see that the inventory has increased, the debtors increase, right. For example, you may want to write, can there be possible debtor impairment issue, because this has increased, right. And so, some of those figures are given. This is a listed company, right. Now, see, we have read the case study, right, and now if you look at out of this 20 marks, are you going to get all 20? Right. So, at least more than 15 marks you want to get. So, how do we write this answer, right. So, it is very easy to answer this part, because if you know some theory, theoretical, and when I say theory, I do not like to use the word theory sometimes, because students say, oh, this is theory, theory is not good. But if you do not have the conceptual understanding, you may not be a good student to apply concepts and unearth issues in a case study. So, what is the main difference between overall audit strategy and audit plan? I have explained you all of this, but if I am writing this answer, what is my answer, right? My first point should be both, right, relate to audit planning. But I see I am not writing the full sentence as such, but I am just writing down the main point, right. But the focus is different, right. Then I have to say in my second sentence, what is the difference in the focus. So, the difference is when it comes to audit plan, right, it mainly focuses on the risk of misstatement, right, at assertion level, right, in relation to these three, right, account balances, transactions and disclosures. See, one thing you want to understand, right, I could have shown you a suggested answer in detail and shown you, right. This is the problem in auditing, I am telling you with my experience. One of the failure for the students is sometimes they simply get the suggested answer, even sometimes without reading the question properly they read the answer. So, this makes a mechanical students who can't logically think and relate theory, and then they tend to have predetermined answer. But if you are a logical students without any fear, you should be able to derive your answer from the theory, right. So, that is why I am, without showing a suggested answer, I am telling you how do you build your answer step by step. Okay, now we are writing this, okay, both related to planning, but the focus is different. In an audit plan, the emphasis is at a financial statement level in relation to account balance, transactions and disclosure, right. We identify risk and also what are the procedures to be performed in terms of FAP, but overall audit strategy relating to the bigger picture, right, bigger picture of the audit, right. When we say bigger picture, another better word would be a wider scope, right, which is beyond financials, but which could affect risk assessment, response and engagement management. When I say engagement management, you have to allocate a team, complete the audit within the time, all of that. So, that is a quick explanation. Then I need to see, if I am a student, I have no idea about overall audit strategy, this 4 marks gone, right. But now we know, because we discussed logically, audit strategy deals with these 4-5 items, right. I explained to you scoping, direction, timing, resourcing, these are big items. So, scoping is to talk about the characteristics of the engagement, right. Now, here this question is theoretical, you do not need to apply this to the case study, but in theory you can explain. But even if I apply this to this case study, in scoping you have to mention that this is a complex industry, right, what the industry is, right, what are the some of the financial locations to visit, so all of that, right. And are there regulations, so these type of questions, right, the reporting standards which are particularly relevant to this company, right. So, the direction is where the attention should go there. First you have to determine materiality level, right. For example, can we use profit as a basis for materiality, right. Is it based on profit or revenue or, right, materiality level decision. Then areas of high risk, right, you can easily identify some of the areas of high risk, see for example, revenue recognition like we identified. Then timing, that is about meeting reporting deadlines. Timing is about, you can write deadlines and meetings with management, etc. Then resourcing, when it comes to resourcing, it is to ensure that you allocate right team for the audit, etc. So, that is how you answer that part of the question. Then the balance part I have already answered, right. I have explained to you, see we have to write only 4 risks, but we have written more than 4. Let me to show you the answers we wrote, and then how should we write, because also remember another reason for failure in the exam is students write more than what is required. Now, if you want to write this answer, 4 risks you get 8 marks, each risk you will get 2 marks. Are you going to write 1 page for each or 1 paragraph? Probably paragraph, bullet points are better. So, in your answer I have already written the answer, right. When I say answer plan we have, now if you have done the same thing in the exam, what I have done by putting comments, you will write in your pen in the paper itself, and then very quickly you will write the answer. So, you can just read the first point. Right. Now, see, out of this 4, the number 1 answer I am going to write is revenue recognition. Why? I mentioned to you, although I have not covered the fraud standard, there is a rebuttable presumption that every company there is a risk of fraud in relation to revenue. But here more than that I am interested to write issues in the case study. So, if I am writing this answer, now you can write with me, you have a piece of paper with you. What is the point we are going to write? Revenue recognition. Then in very simple English, what is the issue? The key issue is there is a possibility that advance can be recorded as revenue as company receive 40% of the advance early, right, at the design work and balance after completion. Therefore, there is a risk that full advance can be recorded as revenue at the time of receipt. That is my first paragraph or first sentence, not paragraph. So, in my second sentence I have to say why that is wrong. That is where I should draw attention to the SLFRS. If company's policy is wrong, I have to explain SLFRS. There I will write, see, you can write with me. According to SLFRS, revenue can only be recognized when the performance obligation is delivered. That is, when the control has been transferred to the customer, and that can happen at a point over the period, and it depends on the particular contractual terms in this case. It may be at the point of delivery, acceptance or passing legal right, etc. So, therefore, there is a risk. That is enough actually for 2 marks. Why should I write more? So, that is the basic answer. Therefore, there is a risk of overstatement of revenue. At the same time, I want to draw your attention to last part of the question, right. How to audit this? That is audit evidence. Now, I have to write that. Okay, before you write that part, see what you have already written and say, write how to audit that. What I have written, I said to see at what point revenue is recognized, I have to check the agreement. So, I will check that. So, my first answer would be, I am answering to part C of the question, last part of the question, right, response. Check, right, sales agreement. Why I am checking this? Check sales agreement for clauses. I am not completing the full thing, you can write if you want to. Check the sales agreement for clauses pertaining to the transfer of control to the customer. Then you will identify at what point it should be transferred. Then I am satisfied it is, let us say it is transferred at the delivery point, then as the auditor I know this cannot be recognized at the delivery point, right. That is one answer. The next thing, definitely if there is a problem with the point of recognition, next issue to audit is cut off, at the balance sheet date any advances received, there is a chance they would have recognized this as a revenue. So, I will select sample of invoices raised at the period end and check what? based on the agreement if it is after delivery, after completion of the full thing or delivery, right, and ensure what? It is delivered, assuming it is on the delivery basis, right. Ensure what? Related machines, in this case we are dealing with machines, have been delivered. And then delivered means what? Can I check the company's delivery note? No, ideally I have to check whether it is acknowledged by the customer, right. So, acknowledgement I have to check. Then I think I actually went to substantive straight away, no, what I said, okay, this is a testing that you can do, but this agreement is a must, you have to check. After checking the agreement, a logical auditor first thing, right, to do is, for me to assess, the real risk, I have to see what controls, right, evaluate and test, controls, right, relating to what? Advances, right, whether advances are properly recorded as liability and deferred, and then it is properly reconciled at the time of dispatch, and then revenue is recognized. So, this control testing is very important, and these are more substantive cut-off testing, and I can also test advances settled during the period and the completion. Likewise, I can perform various other testing in relation to this. So, you can write few, because again you are getting only 2 marks for this. So, that is how you answer that. So, similarly, if I explain to you how to audit share based payment, how to audit here, right, what is the answer? Again, do not memorize answer and write here, the answer depends on what you have written in this part. The first thing is, okay, there is agreement like this, so I want to check the agreement, examine share option agreement. Why I should examine? Because I wanted to verify clauses, relevant clauses, right, for example, number of options given, anything else. So, I have to, sometimes I have to confirm this by looking at the board minutes. So, then I know the subject, there is option like this, and then now company has not recognized, after audit informing they may want to start this process, then in that case I have to evaluate the work of the expert, then I have to evaluate what? Now, in this case, remember, this is accounting estimate, right. Whenever there is estimates, you always have to evaluate what is the, right. Now, I said they can use various model, right, or method or a model. Like I said, there are model like Black School model of share based valuation. You do not need to worry about this. Evaluate method or model and decide whether it is appropriate. And then not only that, you have to evaluate reasonableness of assumption. So, I am not writing the full word in the interest of time, you can write it. Evaluate the assumptions, right. Then there is another point that we wrote, we do not know whether all directors will continue, right. Then I should also evaluate period, right, of directors hold in office, right, based on their, maybe at least to have a discussion whether they have intention to leave, some form of evidence need to be checked. And finally, if there is an expert, you can evaluate whether the expert is the right expert who has done this valuation, that part also you can write. And also in this kind of situation where you it involves management assumption, you can also get a management representation to support assumptions, right. Management representation means management accept that they have used the best suitable, most suitable. So, points like that you can write for the answer. Then take the evaluation answer. Again, my answer depends on what I have written here, right. For evaluation, what are my testing? If I ask you what is the main document I should audit for evaluation, right. So, main document I have to audit is the valuation report, right. Examine valuation report, right, because that report has the date. For example, now valuation should be done before the year end to record during the year end, right, what period it covers, what assets it covers. Now through the report I can verify the full thing, right. The next thing that I am worried as an auditor, see, if you are an auditor, now who did this valuation, right, this now share based payment is a more of a subject relating to finance, but this is a property valuation, right. Then there is a expert. Remember, in auditing standard there is auditing standard for experts separately, auditors expert, there is a management expert, right. If management has used an expert, audit has to evaluate 3 things. Do not forget those 3. In any question you can write this, you can guess this if possible, right. One is C, right, another C, and then O, right, competence, capability and objectivity of the valuer, right. So, this is where you have to write whether valuation has been done by a professionally qualified person, right. For example, there are say recognized valuation qualification, have they done the valuation, and they have, the person has the relevant experience to apply in this situation, right, competence. And when this value is not biased, you know, valuation has been done by say somebody relating to say family, then that company can easily manipulate that. So, like the previous share based answer, you will write the same thing, right, you will evaluate assumption, judgment based on auditor's knowledge, right, auditor can evaluate the assumptions and judgment, right. So, sorry, and down. So, the same answers, similar answers you can write evaluating. Yeah, but remember, there is another thing I want to emphasize. Finally, you know, by looking, auditor has usually a good understanding, business understanding, right. So, auditor will evaluate, one big point would be whether valuation is reasonable, right, reasonableness of the fair value used, right, because you know, end of the day it is a fair valuation, right, compared to market value if this is really unusual. And then similarly, auditor can evaluate assumptions, judgment, these things you can write, but in addition you can specifically check whether all assets covered in this valuation, and then you have to check into deferred tax matter that was discussed. So, like that you can write various answers on this. Then if I briefly cover other areas as well, this right to use asset, again what are very quickly, I am not going to write in the interest of time, you can make bullet points of audit evidence. Auditor may examine the lease agreement to ensure right to use, right, during this 8 years period, and check the calculation of present value, and then auditor should recommend company to account this as a asset, right, lease assets and liability assets should be depreciated, these relevant adjustments should be made. So, when it comes to reversal of provision, you have to, what are the audit evidence? You have to ask from the finance director basis for reversal. Example, copy of the latest status of the litigation, board minutes, lawyers, letters, these are the answers, and do not forget to get a management representation, and then after the balance sheet date you can evaluate what has happened. Then how to audit this last item, one before last, work in progress. Now, this is a detailed item. In an item like this, you may want to first obtain the detailed schedule or a list of work in progress, detailed list, right, identifying different projects with the detailed projects breakdown, detailed list with the cost breakdown, and it is tally into the general ledger, you have to check. And after that, what auditor can do is for a selected, you know, this is a, you can't do this 100%, and do not forget test of control, how management identifies stages. Now, when test of control, you can say evaluate how management identify, I hope you are writing some notes, evaluate how management identify the cost to be allocated to each project, and then stage of completion is a very important word, right. Then as a substantive procedure, you can select a sample and trace each cost component to the supporting documents. So, what are the supporting documents? For example, cost of material can be traced to relevant invoices, right, that is raw material cost. So, overhead can be linked to company's overhead valuation calculation and so on, right. So, like that auditor can also see some of the items, the aging, right, that is analytical procedure is very important, right. So, the long age items and why they are in work in progress for many years. And do not forget to get, auditor can maybe get expert support, right, to ascertain the state of stage of completion, right. And like I discussed, you can also get a management representation supporting this evidence. So, like that you can write that answer, right. So, I have given a lot of points on that as well. And then our last item is warranty provision, right. Again, the main document to check is the agreement, right, whether there is a warranty clause where the company is liable, and after that auditor should assess based on the past experience. So, evaluate if management has estimate. I think they do not have. Once they produce it, that best estimate should be supported with assumption. For example, what is the percentage of return, and then cost percentage of return and the cost of repair, right. Based on that we can see what is going to be the estimate. Then again another evidence, see, whenever there is estimate, these are common answers. You can always check subsequent events. When I say subsequent returns, actual return, you compare with the provision and see whether it is adequate, subsequent return as well as repair expenses, right, can be helpful to see whether what is made is adequate, right. So, basically that, I think with that I have covered almost all the 20 marks question, and I am sure I explained to you, right, key ingredient to answer this question. First of all, we looked at the requirement of the question, and then we analyzed the case study based on our theoretical knowledge, and then we answered each question. Especially part 2 and 3 are very important because they are practical questions. So, I think with that we can actually, this is a good example where we discussed the pilot paper, and I explained to you how overall audit strategy can be applied, or at least conceptually understanding of that, but practically how auditors risk assessment works. So, in this question we also touch the need to be aware about SLFRS, because based on some SLFRSs only you will identify, whether there is a misstatement or not. So, in this question we talked about SLFRS 15, that is on the revenue recognition, right. Then we discussed SLFRS 2, right, that is share based payment, where cash settled share based payments are recorded as a liability, and then we discuss LKS 37, the provisions, warranty provision, things like that. In more general we discuss its inventory standard, right, work in progress, and the new standard right to use model in leasing. You see these answers are connecting to accounting standards. So, with that we will close this session, and my next intention is to connect the same plan into fraud standard, right, because when it comes to risk of material misstatement, it can be due to errors or fraud. So, it is important that you understand fraud risk assessment and then how to design audit procedures over frauds. Thank you.